friends, in this video we're going to be looking at Bitcoin and we're going to be asking a couple of key questions. Have we been in a rising wedge that has broken towards the downside? Is this where we're going to find our feeting, or do we have targets much lower than this, such as 10,625, even as far down as 10,250? Is that in the near future for Bitcoin? Or will we see the prices rising towards the top side again and coming up towards our upper targets of, say, 11,150, 11,200 or so and beyond? So let's get into it. My name is Rocky Outcrop. I do these every day of the week, so thank you so much for tuning into this one. That's weekdays, working weekdays, by the way, Monday to Friday. So thanks so much for tuning in. I really do appreciate you being here. Let's take a look at the charts. If you want to subscribe, that'd be great. This is the Bybit chart. I just added it to the list so that I could do something a little bit different on here. Of course, the actual candles and price action that we see is near enough identical to the other charts that we've had on the chart on the screen here in the background throughout all of the episodes so far, but I just added an extra one in here, and it gave me the opportunity to look at this with a slightly different perspective. So first off, are we going to be in perhaps a channel towards the top side? So I'll just remove all of these. I can use the undo button to bring them back on. Oops. In a second or two when this task is completed. So I was just thinking, are we in a parallel channel towards the top side? This is the 4-hour time frame that we're looking at just now, and I straddled that parallel channel around the top side up here and the lower side down here, but this leaves a couple of things to be desired, to be honest with you, such as the amount of touches that we have along the bottom. So we have two, if you include this wick here and then these bodies here, just count that as one touch. Then we are still waiting to see if we get a third touch and just remain inside this parallel channel. And what often happens when you have the sort of failure of a proper breakout from a rising wedge is that you get a parallel channel just forming anyway. So that's maybe something to look to in the near future. And we'll see how that corresponds and everything with our levels here on the right with the Fibonacci in a second or two as well. But looking at this, looking at the oscillators down below, you can see that there's a degree of bearishness here in terms of the MACD, for instance, where we have our high here corresponding with this high, and then the subsequent highs coming in here, up here, and then most recently just here, for instance, are lower than the previous ones, which makes you think, is there the possibility of a wedge on the go? And if I just undo here a few times, then I'll get my lines back. And this is, of course, then that wedge that we could have been looking at. This is what I was just looking at last night, actually. And subsequently to this, to actually see, well, when was I looking at this about? Maybe about this sort of time, about 8 p.m. or so yesterday. And we see that we've come into this final area of the triangle, and then, or the wedge, and then gone down towards the lower side so far, asking the question, have we broken out? And we've got a couple of key areas to bear in mind then. For instance, this previous low area over here at the 10,700, or the previous high, this area here at 10,700 to 10,800 is going to be the key area for us finding support and just saying that this is just a fake out. And indeed, the next area to look to in terms of just being a fake out or perhaps the full measured move would be down to 10,600. Why do I say perhaps the full measured move? Well, if I just take a sort of rough measuring stick here again and from over there, what a mess. Come on, Rocky, get it together. And stick it to here. And then think about what 60% of this line would be about. Well, it takes you into around about the lower end of where this parallel channel would be at. So that's what's caught my thinking there about the parallel channel, kind of thinking, maybe we get this sort of third touch along the way here confirmed as part of this, or indeed maybe we break down below it, in which case maybe we're going for the full measured move on this here, and you can just kind of do something along these sorts of lines and say, well, perhaps we're going down to 10,271, whereupon, of course, we'd have some real serious questions to answer. Some of those being things along the lines of, say, will this DMI have crossed over here? Will the ADX still be in a strong position? We have seen this kind of turn around here just in this small term time frame, as we've seen many times in the past. I pointed out examples similar to this numerous times in the past. We have come down here towards the neutral line of this on the stochastics on the 4-hour time frame here, and we are, of course, pointing in a downward direction, but there's a slight slope coming onto this here. Maybe we find that our feet in it about the neutral line of that, and of course in and around about these price points here with this previous area and this 10,007 to 10,800 region being so important for us. Or maybe we go on down the way and look in here at the RSI, for instance. You can see that we're still in what could be considered a parallel channel on this one. If I just get the tool out, I could sort of draw this in real quick. Anything along these sorts of lines here And are we breaking out of this zone just now, or are we going to find our footing and then continue towards the top side? And if we did go down the way, what could we be looking at? The key area really kind of, it's got to be considered to be in or around about this zone just here between the neutral line and this previous low, and just looking to see will we break that, and if so, then that would obviously be quite bearish for us. When we look at the highs that we've got in here, this is the high over here on the 1st of September. This is a higher high over here on the 16th of September. On the 1st of September is where we had our high over there. Downward trend kind of initiated. If this turned out to be a lower high, then you'd be looking at bearish divergence. So just jumping up to 24-hour time frame, then you can see how that kind of pans out in terms of the 1st of September, and then if this was a lower high, it'd fit into this overall downward trend that we've been in since the middle of August over there on August the 17th or so. And that would then, of course, be asking some serious questions about what the price intends on doing. And if we did go down here and didn't find our footing and went on further down, bear in mind then that this 236 Fibonacci going against as a retrace against the move from the 17th of August down to the 5th of September or so, would then start to be invalidated as the moves down below the 236 there, coinciding with that full measured move, and that would be fairly bearish on it, of course. Now, if we did move back into the upper end of this wedge, this was just simply a fake out, and even if we did the full move up towards the top side, we could be looking at anything up like towards this sort of 786 in here at 11,931. 12,000 is going to be, from the broader term perspective, the key area to be breaking, just like sort of 10,000 was before. And now, of course, towards the downside, 10,000 remains as sort of the key area of support to be looking to be breaking, if that's what is going to happen with the prices. So there's a couple of things that could lead us towards thinking along those lines. For instance, we've also got, a different perspective that you could have. Come on, catch up. There we go. A different perspective that you could have on this most recent of price action, where we have this ascending broadening wedge drawn in place. Now, this, of course, is seeing that is these lines we have on the chart here. This is a CME chart here. I've really kind of dictated the movements for us, making it quite easy for us to kind of assess what's going on here. And as we move towards the top side, we've found resistance not only at the upper end of this ascending broadening wedge structure, but of course where we had our grey fuzzy line drawn in at. And we've seen that that's very much acted as resistance and profit taking, you could say, 2 times here, with offering up a sort of break-even move for anybody who'd longed the lows here during this head and shoulders movement, and then, of course, failed to push past it. Now, of course, or it actually succeeded, failed to fail the pattern, if you know what I mean. So what we've seen here is the pattern played out with the head and shoulders. Then we've come back up here. Psychologically, this level's of even more importance, therefore, you could think, because of the previous history that we've had with this location in the price action, right? Okay, so that's interesting in and of itself. If we did then move towards the downside off the back of this, could be looking down to those low 10,000 areas. And of course, just staying within the wedge itself brings us down to 10,670. In terms of whether or not there's contango or backwardation happening on the charts, yet again, just like yesterday, hard to see that. So it's hard to have that heavy-headed positivity you might have had by looking at the charts in other ways, so that was, as we've talked about in recent times, something definitely to keep an eye on as we move forward here with these pricings. So of course the 236 at 10,500, that's going to be a crucial area for the price action. Movements down the way could see us coming in here then and ultimately filling in this gap towards the downside as part of an overall kind of high, low, lower high, lower low, lower high, lower low structure. And at that point, then we could really look to see if we've got any sort of distinct divergence on the go, as we don't really have from the broader point of view here between this low that we had on the 25th of August or so down towards this low that we had on the 7th of September or so. Looking here, you can see that there's just this convergence along the oscillators here down below as the strength has continued to go with the direction of that trend since the 17th of August. And that's what we're going to be looking at with regards to the price action over the next wee while. A couple of things I could touch on, I suppose, such as GBDC land still has a gap on it on here on the 24-hour time frame up above our heads. We've also got gaps down below which haven't been filled in yet, most notably this one down there at 1065, which could see the prices going down to that 9,600 gap on the CMEs if both of these were to be filled. Various other ones kicking around as well to look out for. And what else can we look at? Well, for instance, we have the pitchfork that we've had on the charts for quite a while now as well. It's dominated the price action quite clearly for us, laid it out in easy to understand and talk about terms. How long have I been recording for? Just real quick, let me check this. 10 minutes? Okay, cool. So we can wrap this up and it'll be a nice, really good episode, hopefully for people. So yes, so we have this pitchfork here. Come up above the 382 here, as you can see. 236 still existed like it does in the other charts down there at the 10,450 odd, 10,500 area, depending on what chart and what particular bodies and wicks you use. But then looking here at this one, we haven't actually managed to come up to really touch the median line. In terms of opens and closes, well, we opened below 10,800. At the minute, we're now coming down here and re-asking the question at 10,800. So while we did say that closes above 10,750 were key to look for, we've actually managed to get a solid move off the back of that up towards, from there up to these highs up here, 3.5%. It's a solid trading move before we actually seen the prices come back down here and retest. And at the minute, find that it's a little bit lacking in terms of its support so far. This lower line in the pitchfork, movements down past that could see us come down to revisit the 236 in here quite clearly, and then of course we have a broader term 236, which is of utmost importance in terms of the price structure, holding that at the 10,140 area, or of course we could be visiting these lower down targets sub 10k that we've had on the charts for quite a while, as laid out there on the left in the blue background writing area. Sweet, that's cool. That's going to be a darn good episode. So if you find that you get value looking at these charts with me, Rocky Outcrop, then please hit that subscribe button and share it with your friends. Tweet about me, Facebook me, all that sort of stuff. Do all that. There's links down below for Discord and lots of good stuff like that. I'll catch you in the next episode. Of course, remember as well, a friend of yours is a friend of mine. Rocky Outcrop, youtube.com/Rocky Outcrop. Share it with your pals. See you next time. Do 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 do.